Blood has been on the streets lately, but is the bull run over before the real mania phase even began? Well, the truth is we cannot answer that question for you, as no one knows where the market is going. But let's look at some of the most important considerations that could help you navigate the markets.
Let's start with Bitcoin. While sentiment may feel absolutely abysmal at the moment, let's take stock of where we really are, as sentiment can often be mismatched to the market. At the time of shooting, Bitcoin has hit a low of around 78K, which is about 28% of its all-time high. Historically, this is nothing we haven't seen before, as Bitcoin is no stranger to 20 to 40+% declines during a bull market. Even the decline from March to August last year was slightly over 30%. From a market cycle perspective, it would seem that Bitcoin is still on track, and this time is not different. Though altcoins generally would have gotten in on some of this action by this point, we'll touch on potentially why this hasn't been the case later in the video. That said, Bitcoin's daily and weekly market structure has been broken, with Bitcoin falling below its previous range of around 92 to 106K. It has even rejected off of the previous support, erasing all of the gains from Trump's announcement of the crypto strategic reserve on March 2nd. A line in the sand to watch for would probably be the level around 73K, which we need to hold to keep the high time frame uptrend intact. If you've been following our previous Bitcoin dominance updates, you'll know that an alt season is in the cards if dominance manages to start durably trending down. However, this hasn't happened yet, and dominance seems to be on another leg up even as Bitcoin's price is falling, which would mean altcoins getting even more pummeled, at least in the short term. One potential early sign of a bottom forming may be when altcoins stop bleeding against Bitcoin even while USD prices are falling, as this may signal that selling pressure on alts may be subsiding. With Trump's tariff war still in full swing, US equities have also been spooked and are in a precarious spot, with the S&P 500 seeming to have broken an important support level. If the broader market sees a deeper or more prolonged downturn in the coming months, it's difficult to see how crypto could continue its uptrend, so we'll have to watch how this develops.
We're at risk of an economic heart attack because no politician has a plan to get the deficit down, and we've got a debt crisis.
The last few weeks to months have also been filled with some sour developments in the crypto space. From the meme coin cooldown, though this is arguably a good thing, the Bybit hack, which is now the largest ever exploit at 1.5 billion lost, to the LibraGate scandal, where Argentinian President Milei was associated with the Libra rug pull, which wiped over 4 billion off the market. Some say it's hopium, but it's also worth noting some of the positive developments in the last several weeks, any of which could easily become the chosen narrative to fuel a rally if the markets decide to turn around. For one, there have been multiple dropped lawsuits by the SEC, which targeted major crypto players like Binance, Coinbase, Robinhood, Uniswap, Consensus, Gemini, and more. With Trump's election, overall clearer and pro-crypto regulations are on the horizon, and the recent signing of the Strategic Bitcoin Reserve and U.S. Digital Asset Stockpile Executive Order is yet another evidence of that. Besides, while not definitive, none of the textbook top indicators, like the Pi Cycle Top Indicator, have flashed, and total stablecoin market cap is still climbing, which is generally a bullish signal. Adoption by institutions continues, and you can also check out our recent and incoming project update videos to see that teams are continuing to build. Underlying all this is perhaps the most important thing: monetary policy. While some people may argue that monetary policy does not impact the crypto markets, the trend so far would seem a little uncanny if that were the case. Throughout the phase of monetary tightening and rate hikes, this crypto bull market has basically only consisted of Bitcoin's run-up, while altcoins largely lagged behind with few exceptions. Only a handful have seen new all-time highs, while many are still painfully grinding lower. This may make sense if investors see Bitcoin as the relatively safer asset. But why is this? Shouldn't the Fed cutting rates benefit riskier assets? The thing is, while the Fed has already started cutting rates, monetary conditions are still tightening overall as rates are kept higher for longer. Real money printing, or QE, quantitative easing, would only occur if the Fed actively starts increasing its balance sheet. That is, by buying assets like government bonds or other securities, and thereby injecting more money into the economy to stimulate spending and investment. This was earlier expected to happen potentially early this year, though more recent updates from the Fed may suggest it may be delayed. Until that time comes, whether crypto and the broader market can chug along at similar valuations, or it'll have to see a deeper correction first, is the question. Just as it took time for the rate hikes to be felt in the economy, there needs to be sufficient rate cuts and time for them to meaningfully impact the markets.
So, what do you think it will take to bring in retail investors for the next bullish wave? Let us know in the comments below. Bye.